In today's video, I am going to be breaking down and explaining why I am currently buying a lot of ARKK, the Cathie ETF. This is an ETF that is something that some people shy away from while others just dump and pile money into it. Now, there's a lot of people who purchased this at its all-time high very recently, a few months ago, and they sold off when it had a pullback. I'm going to tell you right now, with this ETF, you do not want to buy it when people are buying it. You want to buy it when people are selling it. The reason is because it's a momentum trade. Let me explain. So it's currently sitting roughly around $117 a share at the time of making this video. It is down pre-market, but whatever. Either way, the volume is absolutely ridiculously high at 6 million shares traded every single day. It has basically zero yield, and its total year-to-date return is negative 3.5%. Now compare that to last year where it just blew up. That seems like it's not looking so good right now. However, let me keep on explaining why I really like this ETF right now. The one thing I don't like, however, is the high MER. So if you like to buy ETFs but don't like to buy ETFs that have an MER that's very high, then I would definitely be staying away from this one. Basically, what this investment ETF seeks for is basically long-term growth of capital. This is not going to be an ETF that you hold for a very short amount of time. This is an ETF that you don't look to trade. You don't look to buy when it's going up huge. You basically buy it when there's pullbacks, and then you hold on to it for 5 to 10 years, because the companies that are in this ETF are not going to be companies that are looking to grow massively right now. These are companies that are looking to be massive growth stories over the next 5 to 10 years. And if you look at the 5-year chart, it's gone from $25 all the way up past $150 to now being worth $117. However, when we start getting down to the 2-year chart, we can really start seeing a couple of patterns. And when we get down to the 3-month chart, we can definitely see that it's near the bottom of its trading range over the past 3 months. To me, as long as it doesn't necessarily dip below that 112 mark, of course there was this time, but it was also lower than average volumes as well, then at this point in time I would say that this would be kind of the trading range. And as long as it doesn't dip below 112, then we should be looking pretty good for it to at least be a short-term trade up to 125. Now, this has paid dividends before. It's about once a year, but it never paid in 2021. I wouldn't be investing in this for the dividend. I would be investing in this for the growth. Now, what is so important about the stocks that this holds? Well, its top 10 holdings is about 50% of the total assets. Number 1 being Tesla. And Tesla, of course, has had a really rough time this year, and recently it's starting to kind of grow back up to a larger market cap once again, larger stock price, and it really does have a massive outlook on the future. I'm not going to mention the fact that they're going to build a humanoid robot, but that is something that's probably 10 years out. However, what we're looking at with Tesla is not just a car company, but also the fact that they are a solar panel and battery company, and guess what? That is the future, especially when there's more and more electric companies, these utility companies that are looking to do more wind power and solar power. They obviously don't have wind and solar 24/7. You need to have batteries, and Tesla has the batteries as well as the software on how to run those power packs for those utility companies. Next is Roku. I try to stay away from Roku myself, but they do have a good following. Teladoc Health is another massive future growth story, as well as Square. Mobile payments is huge. Zoom is not going anywhere anytime soon. That's just going to continue to grow larger and larger. And when it comes to Zoom, I'm going to tell you right now that, let's say 30 years from now, this is a massive outlook, but that's going to be a massive business opportunity, because now when we're looking at 10 years down the road, 15 years down the road, we're looking at locally around the world that, hey, we may have a engineering factory out over in Germany, for example, Tesla. Meanwhile, the CEO and the main company itself is in the United States. They need to communicate with each other, and there really is no other option. There's some smaller companies like, I don't know, Skype is kind of going to the wayside these days. Not many people are using that anymore. And Zoom is just continuing to grow. Next, we see Coinbase, which is another massive growth story when it comes to more and more crypto payments. But going back to that idea really quickly with Zoom video, 30 years from now, we're going to have more and more, I'm going to say, factories in low Earth orbit. And again, same thing. We're going to have people on Earth and people on a spaceship, or maybe not a spaceship, but a space station type thing. And they're going to be using, again, Zoom. But that's 30 years down the road. Really shouldn't even be mentioning that. But at least in the next 5 to 10 years, we're going to still see a huge growth in Zoom. But when it comes to Coinbase, that's cryptocurrencies. And I'm going to say right now that cryptocurrencies are going to continue to grow into the future. And Coinbase is kind of set up to basically run that whole ecosystem. And then there's also Shopify on this list as well. And Shopify is massive. Shopify is basically the reason why most companies are able to still do business these days, because all these stores were closed down for a long time, and Shopify allows these businesses to get online. So when we look at the 5-year chart, we do see some steady growth during the early years. We've seen this massive growth mainly due to Tesla and Shopify and just tech in general just blowing up. And now we're starting to see a leveling off period. Anytime that you see a massive growth chart, what you're going to really see is going to be a little bit of a leveling off period afterwards. That's the part that we're in now. This is the time to buy it, because these companies are only going to get bigger into the future. And when that happens, this ETF is going to continue to rise. Cathie Wood doesn't look at what's going to work today. She looks at stuff that's going to work tomorrow. And that's what you're essentially investing in. I hope that this video has helped you. If it has, hit that like button, subscribe, and I'll see you guys again next time.